different mics here. I'm going to mute mine in just a second. If you can hear me, give me a yes in the chat box. All right. Sounds good. All right, I'm gonna do Gabriel. Go ahead and give me a mic check here, and then we'll do Nigel next.
I'm here. Can you hear me?
All right. There's Gabriel. Gabriel, your mic's a little sketchy. It sounds like it's halfway unplugged or something. All right, Nigel, give us an audio test. See if we can hear you.
Yes, I'm here, Hubert.
All right, perfect. All right, so let's get started. You've probably seen the videos of the zones over the weekend and it picking trades and stuff and telling you where the support and resistance is. So here's how we're going to run this webinar. We're going to go Gabriel, Nigel, and then me. I'll be last, all right? And then Gabriel's going to tag team questions and answers for me at the end of the webinar too. So Gabriel Brent is a trader and author and programmer behind the advanced price action trend following system using support and demand concepts, also known as zones. He has developed a system to help traders identify the key turning areas that many traders do not see, also known as support and resistance or supply and demand. He has developed it, and it's taken over 7 years to develop this. So what I'm going to do is I'm going to mute my mic and turn it over to Gabriel. Gabriel, it's all yours.
All right, well, thank you so much there for that kind introduction, and thank you everybody for joining us today. We are going to show you some amazing things, and I'm going to share with you some simple concepts to trade like a pro, and to give you context and why that's so important. So by the end of the webinar, you will see how market context can really help us buy low and sell high. Okay, as well as we can time our trades with these zones and with this concept. And we can also look at market symmetry and actually forecast what is going to happen in our markets based upon the zone technology. Okay, so we're going to also look a little bit at defining trend and maybe some uncertainty that you've experienced with how to define trend and how so many traders are making and saving thousands of dollars by using the technology. But before we get into all that, let's explain to how this came about. Okay, now as always with trading there is a risk of loss, all right? And if you guys received our emails over the past few days, you have seen the zone software predict out some amazing things, and we're going to review what we forecasted and show you how it came about and what went on there. So it's going to be a really amazing experiment here. So with zone theory, the basic ideas behind it goes back to very basic principles of support and resistance and supply and demand. All right, when you take off everything off of your charts, like no indicators whatsoever, what are the bars truly telling us? Okay, where are the big institutions stepping in? Where are the small guys stepping in? How does supply and demand actually affect our market? So that's really what I started off with. Is let's start out at the beginning. But where is the beginning? And I think that goes back to price and volume. Okay, so you can see the supply and demand curve shifting over time, just like I'm sure many of you probably heard about supply and demand shifting over time from your economics high school teacher, and you're like, oh man, this stuff is so boring. When am I going to use this? Well, this is when you can use it. All right. So we're going to be looking at these basic concepts of and how they actually truly drive the market. All right. Now, in order for us to really get into this topic, we need to understand what these zones look like and how they work with price action. All right. Basically, what they are doing is they're using advanced data mining techniques to show us the hidden order flow and to keep track of the order flow events that are going on the left side of your charts. Okay. Basically historical price action and volume. All right. Then we're looking at how the price is reacting to these hidden levels in the present, and then in the future we are going to be able to predict how they are going to react based upon basically how strong and weak the levels are. Okay, so if we look at a quick little example just to show the basic ideas, all the levels with the red text above and below the zones, those are all resistance or supply. All the zones with green numbers below or pretty much below price, those are all demand or support. Okay. Now, as price moves up and down in the markets, it gives us these supply and demand or support and resistance levels for us all the time. All the software does is it keeps track of them for us, okay? It tells us what the market is giving us as far as support and resistance goes. It's not just a single line on our chart, but it is a level where we can expect to see the reaction. Now, the reason why these are different colors is because it tells us how strong or how weak the level is, okay? Now, if the level is really weak, we expect price to go through it. So that means like maybe support is weak for some reason. Or if a level is really strong, then we expect price to go in the other way, okay? So it gives us a gauge of which side is stronger or weaker. Are the buyers stronger or the sellers stronger, okay? And you'll see this stuff work in the charts here as we go to different examples throughout the presentation here. All right, but I just want to make sure that this all makes sense because I cover this every single day from dusk till dawn, you know, and every night too, as I'm working as a coder, and I get pretty used to these principles and concepts, but I want to make sure that they're making sense to you as well. All right, so as far as the time aspect goes, because let's face it, we have price action and volume, and we have time. Okay, that's what our broker gives us. Okay, so it's best that we use those things in our analysis. All right. So for a simple equation out there, support and resistance plus time equals supply and demand. All right. So that's the nice little neat equation, and we can add time in 3 different ways. All right. So how long the zone has lasted, what time of day, and the higher time frame confluence. All right. So that when you put it all together, we get something like this. All right. Now I'm going to break this down for you here. So I just ask that you would bear with me here a little bit. So here's a 60-minute chart. All right, now on the 60-minute charts, we have a brown zone, and we can see through the fractal nature of the markets what this brown level looks like on multiple time frames. I don't know if you've ever heard of the phrase that the markets are fractal in nature, okay? And this software actually gives you an idea of what that fractal looks like and how that functions, all right? So that as we're using price action and volume to categorize this level, and then we see price action reacting to this level, like most price action traders may think, hey, there's a nice little double top, you know? That's just wonderful. And then we see price going through the double top, but it didn't beat the supply level or the demand level in all 3 of these time frames. And guess what? It comes back down, all right? And that level stands firm. Now, you may say that made a new low, and yes it did, but it wasn't an important new high or new low. And with the zones that we are able to plot on your charts, we can look historically and say these levels were all drawn 4 days ago on this chart, and this is why they're important. Okay, so I hope that makes sense, and I see some questions coming in here, and I'm going to get to those questions here in just a little bit, probably more so at the end of the webinar, but your questions are very important. Okay, so with this basic idea of support and resistance in these levels, and support and resistance not just being a line on our chart, but a true area, a true zone, we can do a lot of really cool stuff. Now, I'm sure many of you here probably received our swing trade forecast. Now, this stuff works on, just like we saw it working on the 60-minute to the 5-minute charts. It can work on any time frame, any market. It is really, really amazing. And so if we're looking from a swing trade perspective, we're doing the exact same thing that we just did on the minute time frames, but we're just blowing it up into bigger time frames. Again, that fractal should all make sense, right? So here was the forecast that we pushed out on this New Zealand USD, And we were looking at the entry to the short side, okay? And this is what we were looking for. We're looking to play the range, okay, based upon the weekly, and then we're looking at the daily and the 60-minute, basically for context and for entry points, all right? So the first target that we identified was this nice little aqua level. Now, we don't get to decide how big these levels are, but you can see the fractal nature. We have a blue zone over here, we have an aqua zone over here on the daily and the 60-minute, all roughly in the same area, all right? And it gives us that fractal nature of what price is looking at. Now, without getting too complicated and too far into the fractal, I just ask that you bear with me. So we're looking at here for a first target down here at the aqua level, and then our second target down here at this brown zone, okay? So that's what we're looking for. Well, guess what? Lo and behold, within a few hours of our prediction there, we actually saw price come down and hit our first target, all right? And we can see that the overall risk, if you look at the Y value here, and let me blow that up a little bit for you guys. Okay, if you look at the Y value there, that is 32 pips, all right? So we're risking 32 pips to get our little engulfing price action. And again, I'm just looking at engulfing bars, bigger bars, inside bars, things of that nature to go along with these zones. So we got an engulfing pattern there, and price moved down and hit our first target at 45 pips, okay? That's not crazy, but it got us into the overall idea of playing this range, okay? Because we know that we're on the top side of this range right now based upon zone theory, and we're looking to take it down into the bottom, okay? Because we know where relatively high is, we can look at where relatively low is. Lo and behold, we got our first target. And getting a first target in this methodology is really, really important, because once you get your first target, it allows you to, even though this isn't like a huge, like crazy, like 3-to-1 or 4-to-1 ratio, this gets you into a trend trade, all right? We define the trade as rangy, okay? We're playing the sides of the range, and lo and behold, we got our first target, and it looks like we're on our way to getting our second target here today, okay, as of an hour ago. All right, so this thing is moving its way down there. It knows where demand is down here on the big weekly and daily levels, and we are definitely on our way. So let's look at our next target, or our next forecast. We pushed out AT&T for a forecast of a long, all right? So we're looking at the trend is up on the big weekly and daily. We're in a daily demand level, okay? So here on our 60-minute level, we're looking to buy as price is bouncing outside of this little blue zone. Okay, so we know that we're relatively low, even though we know that big supply is up there. All right, so first target is the purple zone. All right, and lo and behold, guess what happens? As of just a couple hours ago, we did see the rise out of this level. It gave us new support in here with this brand new fresh aqua level. We can see where that is, and it continues to move up for 36 ticks. You know, and all we're doing is we're just risking just below this pivot on basically a confirmation of that zone. Now, if you look at the two pictures, this blue zone has turned yellow now, okay? And this purple zone is going to be turning brown as price interacts with this level. If price stays below this level, it'll turn brown. If price goes through this level, then this level will be taken off. And our second target is all the way up there, you know, and basically this little trade has just gotten us to get in, okay? It gave us a good target. It paid for itself. And now we're looking for the big runner to run with the trend to the upside. And we know that we have big supply up there. So our second target is 104 pips away, or 104 ticks away. Okay? So that's how we can get into these positions. And so far we're 2 for 2 for our forecast. All right, so let's move to our third chart. Here is our third screen, and if we're looking at the weekly, we can see that prices bounce off of weekly supply. Here's a weekly demand, and over here on our daily chart, if price moves away from this level, from this yellow level, then we can be looking for our first target right there and our second target down there, where the weekly and the daily zones coincide or overlap. Now this is on the NinjaTrader platform. It is for NinjaTrader, TradeStation, and MetaTrader 4 platforms. I like NinjaTrader just because it allows me to overlap these levels, so I can see levels on top of levels and draw my own little rectangles on there. So let's see what happened there. Okay, so we're looking for price to move to the downside, right? And lo and behold, price did confirm the yellow level for us here on the 60-minute time frame a little bit later. All right, and let me see if I can bring over my little magnifying glass here. So it looks like we're risking about 36 ticks or pips, and our first targets, that little level that we had identified there, you can see where that level is there. You can see the purple zone right there. You can see that we made that, and that's roughly like 90 ticks away. Okay, so that was actually a nice like 3-to-1 type of deal. It doesn't always work out that way, and of course you won't see getting 3 targets on every single well, you won't necessarily get 3 different trading opportunities that all hit their first target, you know. But in this forecast, this was really pretty, and we can see the power of the zones and how price action is respecting these levels and why it is respecting these levels. So look at how price action came down to this level and then bounced back up to the top. And this did retest your entry point, okay? So expect that to happen, but now price is starting again to kind of drift in the middle, but it looks like it's going to respect the level overall, and we're going to be moving down to our weekly and daily demand, all right? So our second target, again, after you get your first target, then your second target is the big one. That's one that you're going to make all the money because you're basically scalping to get into the trend move, and once you get into the trend move, your second target can be the winner chicken dinner. All right, so that's what we're looking at right there. So you can see 3 different examples of the zones working out in the direction of trend as we have defined it. Basically, we define trend in a very simple way, and that's part of the training library that we have in the members section. So this stuff is all based upon principles that we have openly shared with you in our education, and just the power of these levels. And with that being said, I'm going to hand things over to Nigel here. So Nigel, are you there?
Yes, I'm here.
Cool. So Nigel, I'll let you go ahead and take control there.
Okay, you've got to change me to the presenter.
I'm not sure if this one is if you're the presenter there, or if it's the other person. Is that right?
Hold on. Can you now see my screen?
Yep, I sure can.
So you got my screen. Well, good afternoon, everybody. Thank you very much for coming to this presentation. Let me just say, as the founder of Hawkeye, Gabriel said a very important thing in his short presentation there, that there's price and volume and time. And I was absolutely delighted when we as a company came across Gabriel, and he really opened up and showed us exactly what the zones can do, and we brought them into Hawkeye, and combining them with volume and understanding how actually markets move and work is absolutely fundamental. What Gabriel showed you was how to use the zones to make money. I'm also going to show you in this example that I've got up, which is the British pound daily, weekly and monthly, how it will stop you losing money. Because, for example, at this point here, you can see that at some stage, if this carries on for the day, we will get some red volume coming in, and this Hawkeye trend dot, which you see here, the dot on the price, which is white, will probably go to red, which could mean that you could very well short it, because if you were looking over here at your weekly time frame, you can see that you're in downtrend, and if you look at your monthly time frame, you can see that you're in downtrend too. All with 3 months of selling volume virtually from October on the weekly, but you've got some buying volume here which could have snapped you into it. Now, you did have a possible short up here on Hawkeye where it came up and placed the yellow dot, but we explained that in the Hawkeye training rooms. But to show you how you could save money, you would not get suckered into this short. If it came up, you could very well, as a novice trader, be suckered in. But you can see that the zones give you a support level here, a supply level here, and a supply demand zone here. So you've got the zones all coming up telling you if you are going short, you are taking a lot of risk on, because you have these 3 zones on all 3 time frames around you. If you come over here, this is a Hawkeye indicator, the fat man, which tells you what currencies are doing. The brown line here happens to be the British pound, so it is short against all the other currencies here. But again, this would prevent you taking it because there is just too much risk going into this trade. Let me show you some other interesting things that have happened. One is I'd like to show you what happened on the S&P today. And you can see, I'm not sure whether this comes up on the screen for you. Let me just try and expand it. You can see here, there's a dark black zone. That's a dead zone. When we started today's trading, the S&P opened bang straight up at an orange zone, which meant that it had been there twice before, and that pushed it back. But now you can see this volume has come in. The green volume, this is the indicator, the Hawkeye volume indicator here, comes in. This indicator here is the heat map, which shows me the overall strength of any trend that we're in. When it's bright green, it's telling you you're in a powerful trend. Light green shows you that it's slightly weakening. But here you can see that it's having all bright green, all the volumes come in, and that has pushed it up, and it's gone through that zone. So you know that the risk to your trade to the downside is limited now, and that is very, very important. Just as an aside over here, this is advanced decline indicator that Hawkeye has, that I created, that's showing you the buying is coming into the market, pushing it up. This is on a 5-minute, 15-minute, and 45. That's very quick. Let's go over and have a look at the S&P, because everybody's interested in it, on the daily, weekly, and monthly charts. And you can see, let's go over to our monthly. First of all, coming down into an area where the zones are telling you it will be supported. That is confirmed when we come over to the weekly, and you can see that we've put in a double bottom at the end of this week, providing it continues up. There'll be a yellow dot that comes here. We will have a double bottom in a demand zone, so that will be coming in there, and that's pushing us up. And you can see again here we have overhead resistance on the daily. It's got to get up through there. So we're in absolute no man's land on the S&P. It's telling us there is no dominant trend in place. This downtrend that we have is not being fulfilled. It's stalling, and we are now waiting for buying volume. And last week we had, or yesterday, or Friday really, we had our what day? Tuesday. We had our, what day is it today? It's Tuesday, isn't it? On Friday we had our first day of no demand volume. That white volume there shows us no demand. It means that the professionals were standing to one side. There was no demand, and they walked away, and that is pushing it up there. So you can see that when you do, and I call it forensic analysis, you can see exactly what the markets are doing, where you are likely to get your support and resistance, and more importantly, the trades that are giving you the best setups. So let's go through. I won't do the bonds because that's Hubert's area. Let's go and have a look at crude. You can see crude over here when it came out, which was on the 31st of July last year. It came out here and has been trucking down. It had a little bit of support here, out of it, trucking down. And again, whoops, when we come over now to the live edge of the market on the daily, you can see it came down today, it came out of a dead zone area, it made a dead zone, and it's pushing itself back up again. No demand volume came in yesterday. It's tested down on volume, typical volume testing that's going on here on oil, but we're not getting that serious break. If we do get a breakdown underneath this low here, well, just hold on to your hats because that's 26.05. There's nothing underneath it for a long, long way. Let me also show you something, and I know that everybody likes looking at copper because it tells you the state of the world economy. And again, you can just see these zone levels picking it up here on the weekly, putting it into congestion, and you can see typical consolidation volume, which is selling, 2 weeks of buying, then 1 of selling, the market making its mind up. And then when you come down to the shorter time frame, which would be the daily, you can see that there's some selling here. It's trying to push itself down. But yesterday, it had absolutely, or Friday, it had no demand that came in through there, which will push it back up. Now, one of the stocks that I really like for a gold play, and I think if any of you read my newsletter that I put out this week, is Newmont. You can just see what we have on here. Look at this on the monthly, absolutely stunning, perfect on the monthly. Look at the zone level there. It went up to the zone level, pushed it back down, came up and tested it, and now it's coming over again to test it. Let me come to the live edge of the market. So we're expecting this to go up to the 2770 area. It's doing it on the daily. We have a lovely trend up on the daily that came out of a zone, pushed itself up, and I would be looking to take profit as it comes up to this area here, because the weekly and the monthly are not showing me that it's going to be able to have the buying volume to get through that area. Now let me show you a couple of quick stocks. Well, which one should we look at? Should we look at let's look at Netflix. It's always interesting. Well, there's Netflix come down to a support zone area here, and you can see that it's on the monthly. You've got it coming back down here. It's more likely to come back down and test. So again, that certainly is not a buy, because as we try and teach you, the only thing that you are trading is risk. And the risk on this is that it's going to go down and fulfill that area there, which is at 46.36. It'll break this down here. Look at the volume. We've got red volume, no demand, red volume. I don't see any concerted buying volume. We've just got brokers markup here, price markup, as the market is, the overall market is rallying. The S&P's up 27 handles as we speak, so you can see that that's pushing it up. But it works on all the markets. For example, on the softs, on cocoa, I love trading coffee and cocoa. You can just see this is absolutely gorgeous stuff that it's doing all the way through here, and you can just pick these up time and time and time again. And when you take the zones, the Hawkeye zones, and you tie in the Hawkeye volume or whatever other indicators that you so wish, you really see the power of understanding the internal of a market. Markets are terribly logical. They perform in a very logical way, and unless you understand price, support, resistance, or supply and demand zones and volume, you really are trading without the strength that you could have. I just want to show you a couple and more. We don't have their currency, so there's going to be great uncertainty on the actual pound going in. And when we come and have a look at it, you are going to see, well, that's clever that I spotted that, you are going to see this whole area here come and be tested, and it's going to be absolutely frightening to see what's going to happen to the pound. For any of you that are currency traders out there, the pound pairs between now and June are going to give fantastic trading, and I really mean fantastic trading. And you can see all these dead zones here, and we've got this zone all the way down here on the pound yen. And for intraday on stocks, it works exactly the same, tying in the Hawkeye volume, the zones for the support resistance. You can just see time and time again they hold it up. Let's go to Apple, largest held stock, and see what it's showing there. And again, you can see this rally is coming up into a zone area here. This is on 30 minutes. You can see it's got a lot to get through here on the 60 minutes, and it's into its resistance area on the 120 minutes. We're getting some buying volume pushing it up, but the bias is to the downside. So that is very, very quickly dovetailing and showing you how I use it, combining it with my volume and the rest of the Hawkeye suite. It really gives me the edge. More importantly, it also saves me from taking some very bad trades, because it'll just highlight the risk to that trade for me. So with that, I'm going to hand you over to Hubert, who's going to show you how he uses these indicators in his style of trading. So Hubert.
Thank you, Nigel. Thank you very much. All right, I'm going to grab the machine here. If you guys can see my chart, there you go. All right, so let me walk through what a lot of us do automatically, month in, month out. Let me make sure that I've got everything else here
muted.
I'll be good to go. I think I'm solid. All right, so can you see me? All right, cool. You should see charts, right? Chart. All right. Let me see. Make sure I got all the questions. If you can hear my audio, yes. All right. So here's a discussion you should be having. In this conversation in your mind should go like this, right? And it's probably, you've had this 100 times. You do a lot of this, but a lot of it's just time consuming, right? So if you're support and resistance, here's what a lot of us just do: the S&P 500 and we go, okay. And you know that support and resistance zones are not pinpoint accurate. They're not like lasers, right? What they are they're areas of interest, okay? It's kind of like profiling, right? Good, bad, or indifferent, where you like it or not. That's what support and resistance are. So if we look at support and resistance, we go, okay, so here is the resistance area in the S&P. Well, that's not the only resistance area that you see in the S&P. You can also see, you can go, well, this would kind of count too, all the way down to about here. So then you've got this zone. So then what you do is you then go, okay, I got that. So it looks like the S&P overhead resistance on a daily looks like it's going to be right in there. Does that make sense? And then what you do is you start going, okay, where are some other support and resistance areas? Well, if you look at this little area here held pretty good for a while, right? And then after it got taken out, then it was no longer support, it was resistance. So what you do is you do that on multiple time frames, every day, day in, day out. And now you can see, all right, where's another support area? Well, if we look here, this we know we've got some support here. We've got some support there. That's held 2 or 3 times. And then if you look back here in the back, there was some support right back here, right, which kind of dovetails and overlaps into that area. You guys do this all the time, right? Or worst case scenario, you'll just eyeball it back and go, well, we got some support back here. We've had it here. It's touched it 1, 2, maybe 3 times. Maybe it'll bounce off of here. So, and then you do that going within, you've got support. Now, where's resistance? Now, we zoom in here on the daily and we go, okay, where's overhead resistance? Well, we know we've got some overhead resistance right in this area like that. And then we've got there. So that's how you do that. And you could do that on a daily, you could do it on hourly, you could do it on a 2-minute chart. It all gives different things. But those are the areas of supply and demand, support and resistance. So what Gabriel's done is he mines the data, and he's got a special mathematic algorithm, which is just a script or a piece of programming that go in there and do most of this stuff for me, so I don't have to do it myself. So, I'm a huge fan of, Ichimoku. So I've got Ichimoku here, and I always start everything with Ichimoku. So I'm going to toggle off everything here, but Ichimoku, and boom. Now I've got Ichimoku. Now here on, let's say, let's go something simple here. Let's go at ES. Okay. Now on the ES, I know that, and you can see here I've done it manually again, right? I know that I'm below the cloud, and I should be selling most of this stuff or letting it bounce up and then selling it. So then I just go, okay, Ichimoku, and then I just go, okay, boom, Hawkeye zones. So I've got Ichimoku on top of or underneath the zones. Now, here's a couple of tips I want to share with you, all right? So above a 60-minute time frame means it's supply and demand. Below 60 minutes means it's support and resistance. It's a shorter support or resistance area. And then when you're looking at Gabriel's stuff here, you can say, aqua is new. Blue would be I've touched it one time. Orange would be, hey, I've touched it twice. Purple, like here on the smaller time frame, would mean I've touched that 3 times. And then brown down here would be, hey, I've touched this thing 4 times. So the more tests that you have, obviously that's a stronger support or resistance area, right? So if we look at the S&P, and I'm going to just change this at ES, okay, and now I've got, this is a daily, and now this is a 60-minute. I can see overall I've got a little bit of an area that is here on support and resistance. This is drawn in here, all right? So it's touching there, and then I've got overhead resistance right there. That's on a daily chart. So that's overhead resistance from here, which is about 1884 up to about 1946 right there. So that's my overhead resistance, okay? Now that's on a daily time frame. On a 60-minute time frame, I have a little tighter support or resistance area. I've got resistance here, I've got resistance here, and I've got it up here and up here. So what you got to do is you first have to figure out, let's do an informal survey. How many of you in here are swing traders? Just give me a yes. Just type in S for swing trader, all right? And if you're a day trader, type D for day trader, all right? And you might do both, but for the most part, you'll gravitate more towards one than the other because you'll probably make more money swing trading than you will day trading. Most people do, but not all of us, but some of us do. And I would say I'm probably 70% swing trader and 30% a day trader. Like if I see something interesting, I'll jump on it. But I like to hold things for 3 to 21 days. That's kind of where my sweet spot in my market is that I like to play with. So if I'm going to swing trade, I can overall look at the cloud and see if I'm above or below the cloud and see where I'm at support and resistance line or supply and demand, okay? And then if I'm looking at a smaller time frame, I can look on a 60 or below, and it'll work on 60 or below. So this is a 60-minute time frame, and if you want to go crazy and say, all right, I want a 5-minute, you can do it, and it'll handle it just fine. It's just going to change depending on where you're at in the price action. So on a 5 minute saying, hey, the S&P, this is overhead resistance, that's brown, it's touched it 4 times. So in order for it to get through there, it's really going to have to work hard in order to get through that brown area because that's been touched 4 times, okay? Does that make sense? So if we're looking at this, oh, does it work on toss? It does work on toss. You have to do a special step where you have to go get a Ninja account, and it'll work on stocks and index futures on toss through Ninja. So you set up a free Ninja account, and it'll feed it. Ninja will feed toss, and then it'll work on stocks and index futures that way. Yeah. You hold futures markets overnight? Oh yeah, I hold futures markets overnight all the time. That's the best way to make money, in my opinion. Futures markets are open for the most part 23 hours a day, so there's only just about anywhere from an hour and a half to 45 minutes depending on the market. Sometimes 2 hours where they're closed, and then you're right back on top of them. So you don't have to worry about the gaps and stuff. But yeah, there's nothing wrong with holding futures. I mean, some of them you can hold for 3 months at a time, which is really profitable if you're on the right side. So this is a 5-minute chart. It does work on MT4 too. So I'm going to change this back to a 60. All right. Boom, boom. Bing. There you go. So there's a 60. So let's take a look at a couple other things. If you will, just give me something to look at. Just type something in the box there. Make sure you use all big case letters like cap locks, and I'll do a couple examples of how I would go about using this and kind of automate it. So Boeing. All right. So the first thing, I always filter everything through Ichimoku. So I'd go Boeing, and I'd go, okay, where's Boeing at? Are we all in agreement that Boeing is in a downtrend according to Ichimoku Cloud? If the price action is below the cloud, that means it's probably going lower, okay? So if we go, okay, that's going lower, then I want to go, okay, I want to know where my support area and my resistance area is. All right, so I'm just going to go over here to the zones, and I'm going to go BA, boom, boom. BA on a daily, all right, I've got overhead resistance here at the brown, and it's been hit 4 times. So if we bounce up, that would be my area to short it. Now, if I'm looking on a smaller time frame, so my larger time frame's on the left, the daily, my shorter time frame here, this aqua, and you can see this has been there's support, there is support. My overhead resistance on an intraday time frame is going to be 116.88. Well, I know that this right here, the starting resistance is going to be 118.86. So my resistance area would be 116 to 118 is where I'd want to short that at. Now, oddly enough, that also coincides with the 60-minute cloud being still below it. Does that make sense to your brain? Okay, let's go look at gold really quickly because I got a lot of you asking me about gold. Let's go at GC. So gold for me is a raging buy on Ichimoku. So it's saying, hey, it's trending up. Okay, but it rolled back over. All right, so, oh, look at there, perfect. So you've got on a daily overhead resistance, tagged it perfectly, rolled back down, and now on daily I'm on a support area. So that would be a buy as of today, okay? My stop loss on a daily would be 11.67. Now, I probably wouldn't use more than a 6-point stop loss, to be 100% transparent and honest with you. More than a 6 to 10 point stop loss on gold can get a little expensive if you're not on the right side. Now, if I'm looking for a smaller time frame, like a 60-minute, on a 60-minute, if it could pull back down here to 12.202 or 12.203, I would take it. But here's the play right here. It ran up. There's support. There's support. Boom. Ran right into resistance. And now if it goes back down to 12.02 to 12.03, I'd be a rebuyer there with the anticipation of it going back up here to 12.58. Right? How do you determine the thickness of the zone? I do not figure they do it themselves. The math that Gabriel set up for the indicator with his data mining actually takes advantage of that. But you can kind of see how he's doing it, right? Like this is the high, this is the low, that's the high of that wick candle, that's the low of that, and that's going to be a support and resistance area. Yep. How do you determine if it's support or resistance? Well, it depends on overall. You start with the daily first. If you're in a daily downtrend, the same way. If we're in a, let's take a look at crude oil real quick. Crude oil. I would say crude oil is still on a massive downtrend on a daily. It's below the cloud. If it bounces up to say 35.31, that's overhead resistance on a daily. Now, if you're sitting there going, hey, I actually want to buy this bottom area where you have some support here, and then your overhead resistance will here. So it's along in this area, and they take some profits into that area. So it really depends on where you're coming from. Does it use market profile? No, it doesn't use market profile. It just uses very simple support and resistance areas. If you want to use TOS with a free ninja account only gives you daily charts. I think you need to get a paid account for interest charts. Don, we'll look into that for you. Yes. Let's see here, Natty Gas. All right, so let me do a couple more stocks here. Amazon, let's take a look at Amazon. AMZN. Amazon would be a short. It is below the cloud, okay? Amazon is a short. It's below the cloud. Let's go take a look and see what the zone says. AMZN. Boom. Okay? Oh, well, AMZN. It really helps if you can type. All right, so Amazon is a short, all right? It's bouncing off of support here into the overhead resistance. So it went bam, boom. See how that, bing, bing. See how it works? Bing, bing. So bounced off this support, boom, overhead resistance. That's on the daily. So that right there is a sell right now on Amazon at 514.17. Stop loss would be 538.99, and your target right here would be 485. That's on the daily if we're going to swing trade it. If we're going to day trade this thing, well, we're going to use a smaller time frame. So let's go down here to a 5-minute. So on a 5-minute, what I would want to do on a 5-minute, because if you're going to day trade, you need to use a smaller time frame. So on this situation here, you've got, this is an open gap. We ran into overhead resistance. All right, there's overhead resistance. And then, boom, there's support, and then there's support. So this is a shortable area, cover 1, cover 2. And now you just see if it's going to drop again for you. All right, why does Ninja Trader offer free lives? And I don't know. You guys are going to have to call the trade station on that. Let's see, but some futures you cannot hold for more than a month because of rollover, so you have to exit trade even if you don't want to, like crude. No, not really, Billy. You can roll them. You can trade if you've got a futures contract that trades multiple months out, like if it trades January, February, March, April, May, June, July, August. Well, you can just trade it out 2 months out in advance. So that'll save you, Billy Ray. Billy Ray Valentine. You can do that. So you could still trade out 2 or 3 months ahead of time, as long as you got the volume, so you don't have to worry about that. Does that make sense? Give me one more. Give me a couple more stocks. I'll do one more, and then I'll show you the price of said indicator, and then we'll take some Q&A. I can't see that. I did Amazon. Let's see here. Yahoo. LMT maybe. AMBA. Well, let's do boring Microsoft. MSFT. Let's see where Microsoft comes out. All right, so Microsoft is interesting. It is below the cloud, but the lagging line is not confirming. So let's see what the zones say about MSFT. MSFT, so I'd be more inclined to go short Microsoft on a daily. Intraday, overhead resistance, and then boom, you had a short from 50.89 and a cover at 50.22. Let's see what the daily's saying on Microsoft. On Microsoft, it's got a little bit of support here and overhead resistance, so I'd reshort it at 51.46. Yep. Yeah, you can't really, like, you don't do stuff like Pandora or Groupon and stuff like that. That's going to be GRPN. That's all news generated, right? Because Alibaba wants to think about taking a stake in them. So that's overhead resistance. So they're still going to have to chew through that. So on that stuff, overhead resistance is at 405. And you can see it has not got through that yet. Yeah. Good options playing in the zone. Let's take a look at Caterpillar CAT. Caterpillar is on a, let me check my cloud first here. CAT. Caterpillar is in a downtrend, is still below the cloud, so I want to place short zones. So in this area, that's just short there, and then a cover, and then on the intraday, I would still be shorting with covers at 64.46. Yep. All right, now I'm going to put a PowerPoint on here and show you this offer. So is Hawkeye Zones, what's included? So you're going to get the Hawkeye Zones software and the Hawkeye Zones time, which we didn't cover much today, but there's a video on showing you how to use that. Access to the main membership site, user documentation, training videos, special webinar price of $697. You can also call the office, area code 859-963-3445. Now, I will tell you that the operators are standing by. Today we got snow, so my office is helping answer the phone, so Michelle and Jared are both standing by. If you call them, they should pick up. They've got actually phones at their home that they can talk to you on. What platforms? It works on Ninja Trader, TradeStation, MT4, and it will work on TOS if you use Ninja Trader to feed TOS. It will work for stocks and index futures on TOS, and a lot of people are confused on that, so it's pretty simple. All you do is you go over to NINJATRADR, Ninja Trader, and you go right here to your Ninja Trader, and you click that link right there one time, and then what you do is you go download now, free to use. Put in your email address there, and then I think they have a free data on certain things. And what you can do is you go, hey, I want to feed my Ninja with TOS or TOS with Ninja, and it takes care of it. So you can chart this indicator in TOS and feed it with the Ninja data, and it works on stocks and indexes, and that's a pretty simple way to do that. So I'm going to put a link in here for you, and so you can do that. Let me make sure I got that set up right. There you go. So it's HawkeyeTraders.com/target. Here's the telephone number, area code 859-963-3445. On one of these webinars before, I almost gave up my cell phone number. That would have been rough to handle all on my own. All right. Does the offer have a trial period? No, it does not have a trial period. Is this a one-time price? Yes, Kurt, is a one-time price of $697, and then it is yours. How many bars does the zone look back to draw the zones, please? I'm having a problem. Both the zones and Ichimoku card. I bet I know what your question is. I think I know how to answer it too. Are you talking about, is it saying, hey, you don't have enough data? So if you're going to use Ichimoku, you've got to have 20 to 25 bars in the future in order for this thing to forecast in the future for you. Okay? So you got to have 25 bars. So go right click and then go format window, and then you go spaces to the right. I've got mine set for 25 bars. That should fix you. Yeah. Yeah, that'll fix you up. So where do you learn about the time zones? Can you give a brief overview? Yeah, it's covered in the user documentation, and then it's also covered in the videos. But what I will do, Gabriel, can you hear me?
Yeah, I can hear you. I can bring up a chart and do that.
All right, cool. So I'm going to hand it back over to Gabriel, and I'll be right back. He's going to show you some examples of the time zones and how to use those.
All right. Well, thank you so much, sir. Let me flip this over here. Okay. So hopefully everybody can see my screen. And this is basically the time zones and the price zones put together. Okay. Now, what's really nice about this is especially if you're day trading, and this is really used on a smaller based time frame. All right, so whether you're in NinjaTrader, TradeStation, or a MetaTrader 4, you will have this indicator, and I recommend using it basically on a 5-minute chart or less. Okay, so we hit the time zones, and we can turn them on and off in NinjaTrader, which is really nice if you want to do that. Looks like it's taking a little bit of time to load, but basically what happens is it allows us to look for price to be interacting with the price zones at these certain times of day. Okay, so you can look at it on 1 minute, and basically what this does is it gives us a filter of time. Okay, to be saying, hey, when price is interacting with these zones over here, or when price interacts with the levels right here, you can be looking to buy or sell. Okay. Now I'm going to assume that most people here are probably into the index markets to some degree, the U.S. index markets. And I'm just going to come over here and show you some quick examples from today. Okay. All right. So this is how it works. Basically, when price interacts with the level, and you can see us trending up to the upside here, multiple bounces off the level at the given times of day. Okay, we're starting to go through a level here at the time of day. All right, so those are the things that we want to take advantage of. It's just for when price is interacting with these levels at the given times of day. We also have the first 15 minutes. This is basically the top and the bottoms of the hours. It's basically what it turns out to be, as well as the first 15 minutes. And we're using this to basically limit ourselves as far as trading opportunities go. Okay? And so if we know that price is bouncing off of a level at our time of day, then that's great. Okay. If price goes through a level, and again, you can see the brown zone. It's been bounced on several times up there, acting as good resistance, and now price is going through it. Okay. But lo and behold, there's a little bit of resistance just above it. So don't be surprised to see some type of reaction back down here. Okay. So that's what we're looking for. And we can also only just show the most recent levels, just so if you like, you can see how beautiful the range play is in between those two levels. And as soon as that brown zone price goes through it, it gets taken off. And now we can actually come in here and we can view it again if we turn on the dead zones. Okay, so maybe price will come back down here, and again, on like a small 1 minute time frame or small minute time frames, we're looking at support and resistance. And this is really what the time zones does as well, is it helps us time the trade with support and resistance at these times of day. Okay, so if we maybe move up to 3 minute, we can see some other interesting interactions of price action. Now, these zones are highly dependent upon data. So if you don't have in enough days of data, then you won't see zones as price is moving up or down. Okay, this is a data mining tool. Okay, so we want to make sure that we have enough data to understand why price is doing what it is doing. Okay, and this helps us get that perspective of jumping into the trend, jumping into these different levels from the big time frame perspectives into the small support and resistance type of charts. Okay.
All right. Thank you, Gabriel. All right, I am going to put the slide back up here for you, and we're going to take some Q&A real quick. Let me see here really quickly. Swap the thing back out here. There we go. And
yeah, we do use the dead zones on the MT4 version. They work regardless of platform. We're trying to make every single platform feel as much like the other platforms out there. I would say that the NinjaTrader platform gives us the best support in the background for all these advanced features. So it's a little bit, it has a few more features that the other two platforms don't, but they're all basically doing the same calculation. So you're going to see that consistency in all the different platforms as you use the software. How many data points? The data points, think of it as how many days are you loading, or how many bars are you loading on the charts. Okay, using the data mining process, we're data dependent. Okay, so on a small time frame chart, I really recommend loading right around 30 days maximum, just because if you load it up with like a year's worth of data on a minute chart, all that number crunching is going to take a lot of time, and your computer actually has to work for a living now. So this is not your run-of-the-mill indicator. This is advanced data mining techniques. So if you have a year's worth of data on a minute chart, then you're going to be processing, thousands and thousands, maybe 10,000s of different support and resistance levels popping up and down on your chart over that period of time. Yes, these levels are automatically plotted. Okay, so it saves you a bunch of time from trying to understand where the high volume nodes are, or if you want to put it in another terminology, accumulation and distribution levels are. It's really all the same type of level. It's just different ways of addressing these zones and these concepts.
all right, let's see here. How do you get a hold of support phone or just email only? No, you can call the telephone number, area code 859-963-3445. That's my office. But you can also fire off a support to Hawkeye Traders. Hold on just a second. I will get you their support number or their support email. It's probably listed on the side. Hold on just a second. Give me just a second. Traders about us. Oh yeah, they have a telephone number too. Here is the contact form. So it's support@HawkeyeTraders.com. Support@HawkeyeTraders.com. I'll put that in the chat box. They've already got it done for you there. Perfect. Will there be a live sessions where I can see levels being used? I can do that right now, OJ. If you have a specific question, I can answer it for you right now live. I would like to know more about that, Raymond. What 97 package is he talking about? Well, there's a volume package, which is totally different than zones. So you guys may be slightly confused on the volume package and the zones. So zones is what we showed today, where it's support, real-time support and resistance. Okay, OJ. So real quick on the Russell. Let's take a look at the Russell. Let's go at TF. So on the Russell here, you can see overhead resistance right here is going to be at 1014.5 to 1035.8. And then on the smaller time frame, like the 5-minute chart, like right now, it's got a little bit of overhead resistance at 992 right now. 992 on a 5-minute for an intraday time frame. Okay. So intraday right now, overhead resistance 992.5 with a target of 990.2. And we don't really have any support. We've just got overhead resistance on the Russell, obviously, clearly, because it's in a massive downtrend. It's bouncing up some today, but not much. Let me see here. Do you have? That's a good question. Do you have any past performance data on what is the percentage of accuracy of the Hawkeye zones? So Don, it's an area. It's not a trading system. It's an indicator that will allow you to identify support and resistance areas. It's not a trading system though, so it would be hard to give you past data because most of us are going to trade a little bit differently, right? Yeah, so that'll do it. Please send me the link. So here is the link. I will put it in the chat box again for you really quickly here. It is HawkeyeTraders.com/target. And I will also put it in a PowerPoint here for you really quickly so you can have it. That way I don't have to keep on giving it to you. Dink! There you go. It's in the chat box. Here you go in the chat box. Send to all. There you go. Telephone number is, let me put the PowerPoint back up because that gets to be a little more. There you go. So Hawkeye Zones, what's included? Hawkeye Zones time, so you're getting support and resistance area on real time on your charts. You get the user documentation. Training videos are going to answer probably 90% of your questions. Shall it be ignored? If the zone is too wide, then how do you use it? That's how wide the zone is. No, I wouldn't ignore it. I mean, that's how wide the zone is. What I would do is I would do one trade at the low zone and one trade at the high zone. I wouldn't mess with it in the middle. That's what I would do. All the training videos are going to answer probably 90% of your questions. Special webinar price $697. HawkeyeTraders.com/target. You can also call the office at area code 859-963-3445. It's available on NinjaTrader, TradeStation, and P4, which is mainly forex. And then you can also do it on Thinkorswim if you use Ninja. Okay, there's a way to do that. So retail price is $1,000. Special webinar price only $697. Order by phone 859-963-3445. Webinar special price $697. And the link is HawkeyeTraders.com/target. Does it cost more if you use more than one platform? I do not know the question to that. I think they have a small upgrade fee, Chris, if you change platforms or if you need it on more than one platform. I think they do, yeah. I mean, if you max it on your 2 computers, yeah, I think it's, but I don't think it's much. I think it's like $90 or something like that, or $97. It's a very small fee, yeah. Yeah. How do you install it on another computer if you accidentally install it on the wrong computer? You just call the office. They'll help you with that, or fire off an email, support@hawkeyetraders.com, and they'll help you with that. They have a really good support team and staff. Yep. Yep. All right, that is going to do it for today. Any other last-minute questions before we turn you loose on the trading world? All right. Good luck. Hope it helps. And we'll see you on the next one.